Welcome to TradersArmy.com, defending your right to build wealth and preserve capital for generations to come. Yeah, Wednesday. Good morning, everybody. Welcome to the Wednesday morning edition of the Daily Market Commentary. I am your host, Chuck Fulkerson. Hope everybody had a great trading day yesterday as we finally got a little bit of movement on a breakout. For those of you new to the channel, do me a favor, click that subscribe button down below. We look at the same 10 to 12 futures markets every day, identifying potential breakout trades and turning points from an educational perspective. If you are a regular viewer of the DMC, do me a favor, leave a like, leave a comment, leave something down below, and you will be greatly appreciated. Thank you much. Let's dive right in. So we're basically flat this morning in the equity index markets. So in our index markets, we can see that we did finally receive that little bitty breakout in the S&P. So we did get a breakout. However, we got very minimal movement after that breakout, right? My rule on breakouts is that I need 6 candles. If we haven't started to make the move after 6 candlesticks, we're probably not going to make much of the move. Now, this one did start to make a bit of the move. We got a little bit of a pullback into here. This should not have stopped you out if you follow the breakout rules. Okay, should not have stopped you out. So realistically, this trade should still be moving. I would at this point, however, move your stop up underneath this area here or to break even at the very least, simply because we're not getting a very strong move out of the level. And without a strong move out of the level, I can't really buy into this trade. My 6 candle rule on my entry time period is something that I have become pretty adamant about. Overall, because it's helped me a ton to really focus in on what I'm doing, and I only look for things that have high probabilities. Now, a little bit concerned that we didn't set a new higher swing high off of this low, right? We had our breakout, we then pulled back. We did not set a new higher swing high off of this low. Our next swing low didn't set a true higher swing high either. Our next swing low, we finally set a higher swing high. But look on the way down, our first swing low, we set a lower low. So I think that while we had our breakout, I don't believe that this is going to, continue its gigantic move. And typically, these big speed candles like we had here get erased, meaning price oftentimes comes back and looks for where did that start, right? Where did that start? Why did it start? So just be on the lookout today for a bit of a pullback. I think that there's a strong possibility. It'll be more of an intraday setup that we get where there's a chance for a pullback, but I think one will exist throughout the day today, possibly even a breakdown below, call it below this area here. Now we have a little level right there, and if it wasn't for the fact that it was formed at 8 o'clock at night, I'd really appreciate it and I'd really be ready to go, but it just doesn't set up. The Nasdaq. So in our NQ level, yesterday we talked about this confirmation style short entry, and the confirmation short entry. This was a confirmation entry. It just wasn't amazing. We had come close to it a couple of times, so we set up as a confirmation. And good gosh, this is why we do confirmation style entries. Price blew right through that level. Now, it did come into our 15-minute level for a reversal. And we got a little bit of a move away inside that 15-minute level. So if you did take that trade, we got a nice little move away that came to its opposing fair price value area, right, which is right here. And that's the part of the problem with basing before a level is that basing before a level will oftentimes reduce your profit position, right, your ability for profit. So if you got in and you took a little bit of money off the table at the opposing level, great. If you didn't take any money off the table, at the very least, I would be very tight on my stop. Although it's still 20 points wide, so 20 points wide is still a fairly wide area. We did trade all the way to the top of this area, so now I need to take this level and remove that level from my chart, and setting up for a potential breakout to the upside as well. So while I could certainly see a pullback coming, I could also see, you know, a breakout above on this level as our next area comes into play at around a little bit above 6,800. So there is still room to run if we do break out above there. You know, a lot of this basing, though, is just a lot of sideways price action. There's not a whole lot in there for me to look to do. I would say that there's a little bit of weakness in this looking at the ES. Now, the Nasdaq is, you know, relative weakness. It's a little bit, you know, the S&P's up 4.5. The Nasdaq's basically flat. And so it's a little bit weaker, although not much. Crude oil. So in crude, we had set up a long in crude from our prior trade. It moved up, got to its target, and now we started our way back down. Now looking at this in crude, I was actually looking at this last night. We have a little bit of a level right up in here where we could see a bit of a reversal. I actually was looking at this last night, wrapped my lines around it, and price didn't get back. However, we did set up this little area here where price has started to fall from. So I think that there's a chance that we get a little bit of a drop off of our current price and where we are, and so a little bit of bearish price action could give you at least a breakout entry, or, you know, we're getting a little setup for a tiny reversal at this point off of this little wick over wick level. So let's see if we get a turn down from there. If we do, this then still is a valid level on price returning to this area. This is the time of day when sometimes you'll get decent time of the day entries in crude that happen at this time. However, we're still between better levels, and it might be better just to wait. Right? Don't force it. That's what I said yesterday, is don't force a trade. Same thing in gold. Oh, gold's so frustrating. We can't seem to do anything in gold. It's just chopping along in between. And this is typically when big breakouts occur one way or the other, right? I mean, that's kind of the ilk. We didn't get much of movement yesterday in gold like we did in the S&P on the breakout, but we're still in between two areas. So once again, nothing to add. So I hate to, you know, sound like I'm stepping away, but I don't want to force a trade either. Well, what I just said about gold, ditto. Bonds, much the same way. We are in between two levels and two areas. Not a whole lot has happened in there. We did put in a little bit of this drop right through here and a little bit of basing right there. So if I go down to, say, the 15-minute time period, you might be, you know, able to use this area here for a slight reversal trade. If price comes back into this region, I think there's a good chance for a reversal trade in this level. It's got to be a 15-minute chart, so we have to look at that. Next, Aussie dollar. So in the Aussie. So the Aussie did actually hit our short entry. We got a little bit of a nice move away on the Aussie. It came back a second time, a nice strong move away the second time through. Now, that level that we found on the Aussie is this little wick area above this mess here. So yesterday when I was looking at it, there was this mess here, and we moved our entry level to a bit higher. And that came right in, hit that for a nice entry, and then price moved away. So if you're able to catch that trade, leave me a note in the comment section down below. It would be great to hear from those of you that were able to catch that one. And now it's coming down to, you know, this is about where our target would be. It's kind of coming down into that range. So the Aussie dollar moving nicely. If you did get into that one, take some money off the table at this point, at the very least, and I would take your stop on what's remaining and move it above 71.97. Okay, so move it above 71.97 if you're still in one contract. Our Euro breakout worked out really well. We got a nice move out of that breakdown. It's continuing its move down, so there's no reason to be out of this thing yet. If you did get into it, it's not now a good idea since we've put together this little bit of basing. Take your stop and move it to 11458. I think that's a pretty safe spot to move your stop, take some money off the table, lock in some profit. Okay. And then the Canadian dollar is doing exactly what it was doing yesterday. Wah, wah, wah. Not a whole lot, right? I used the tuba noise. Not a whole lot. Now, let's go look at our currency that is fun, the Great British Pound. So the British Pound yesterday on the Brexit vote had a huge sell-off and then rally right back up. I mean, just a straight up V bottom on this thing. Straight up V bottom that it put together. And so, does this still remain as a potential long area when price gets back to here? Yes. However, once again, I'm still between major areas. There is a lot of news coming out in Great Britain with whether there's going to be a no deal Brexit or what's going to happen. And so be cautious on what you're taking and understand the risks that you take when you're into these markets, especially in periods like this. You can get gaps. Gaps aren't overly common in the currency markets or in the futures markets, but when the gaps happen, they are catastrophic and they can wipe out your account. So please, I would implore you to trade this one carefully, especially paying attention to any of the news cycle that are going on. Japanese yen, a lot like the Canadian dollar, meh, not a whole lot going on, and not a whole lot happening. Yesterday, we had talked a little bit about nat gas, and that nat gas, the sell-off, is still moving off of that level as it's kind of continuing its run down. So as far as today goes, I want to see, are we going to come down from this level? We're definitely seeing, that no real strength in the move off of the breakout. And so, like I said, if you took the breakout, great, take your stop, lock in some profits. At the very least, move to break even so that you are protecting yourself and being fairly safe. And then hopefully you're able to catch onto that Aussie trade. And we're just sitting on our hands for a lot of other opportunities at the moment. So with that being said, I'm going to turn this thing off. Thank you guys so much for joining us today. If you got any questions, please send me an email, support@tradersarmy.com, and I will see you soon. Later.